Gap down to around the low of last week. I think the low of last week is important. We traded above last week's high, and now we're back below last week's low, and we have a wedge 1, 2, 3 weekly chart, and an extreme buy climax. This could be the start of the correction. We've had 2 doji bars on the weekly chart. If this week closes back around the middle on tomorrow, Friday's close, it could be another doji bar. On the other hand, if it closes below last week's low and on the low of the week, that would increase the chances that we've begun the pullback to the moving average. That would be the minimum target. A lot of times when you have a channel, the market gets about halfway down and goes sideways around the moving average and decides whether the market will resume up or reverse down. I think this is so overbought that would probably have to come down here. On the daily chart, that's down here, the May low or the March low, 2350 or so about 150 point correction. Monthly chart, 9 months without a pullback, extreme. It's a sign of strong bulls, and therefore the first pullback probably will only last a month or two. Here we had 7 bars and a 1 month pullback, and then 1 month pullback here. Here 1 month and then a bigger pullback. But it's unlikely that we're going to go from a bull trend that is as strong as this into a bear trend. And that's true in the weekly chart as well. A very tight bull channel. Even though it's a wedge, it's a very tight wedge. And if you get a wedge reversal and the wedge is tight like this, the reversal is usually minor, which means a bull flag. It might come all the way down here, but it still will probably be minor. Probably the best the bears can get is a trading range, not a bear trend. After they get a trading range, then they might be able to get a major trend reversal. Here, very tight range, probably a minor reversal, and then they can try to get a major reversal. Here they got a lower high major trend reversal, but it did not lead to a bear trend. It just led to a test back down to these lows. We may just kind of stay around the open of the week until tomorrow, tomorrow's close, and then decide, are we going to close near the open of the week, at or below the open of the week, and have a bear bar on the weekly chart, or are we going to close back near the open of the week and have another doji bar? I think that is what the market will be deciding today and tomorrow. We had a big sell climax a couple of days ago. And then yesterday was sideways most of the day. Bulls trying to get a double bottom reversal, neckline, measured move up. And the bears would like this to be a bear breakout of this bear flag. So bull channel, bear flag, we gap down, and the bears are hoping that this rally is simply a pullback and that we'll do this for the rest of the day. To me, this is not good for the bears. You don't want the market to get right near yesterday's low and then immediately reverse up. If you're a bear, right? That's good for the bulls. Yesterday we had a similar situation. We had a bull bar closing at its high for the first bar, and we had to get one more leg down. I said at the time I was suspicious of that because the channel was so tight. Well, this has a higher probability. If we get the exact same bar today, it has a higher probability of being a low of the day because this is now a double bottom major trend reversal. Here it was a minor reversal, very tight channel. Here we've already had a breakout far above the bear trend, and therefore this would be a major trend reversal attempt. Big bar increases the risk, but if it closes on its high or has only a 1 tick tail on top, it would have maybe a 30% chance of being the low of the day. So it's not, it's an okay buy, but you're risking 4 points on the first trade of the day. If it has a 2 tick tail, 3 tick tail, I would wait. We also have the issue of big up, big down, big confusion, and it increases the chances that we're going to get a lot of trading range trading. Okay, so there's your bar, 3-tick tail on top. While it's possible that this is going to be the low of the day, I think a lot of bulls will wait to see if we start to reverse up strongly and buy the close of a second bar, or wait for a micro double bottom. For the bears, we broke below this double bottom, and they're seeing this as simply a pullback from the break below this double bottom. But we got a lot of bull bars on the screen, including today, and therefore right now it's not looking all that good for the bears. Can you sell below 1? The bears yesterday made money selling with a stop below 1. I would not look, if all of this was taking place well below yesterday's low, I would be more willing to sell low, but it's not. It's taking place right at support, and we're trying to reverse at support. It's not only the support of yesterday's low. If you look at the daily chart, it's the low of the month-long trading range. Here, 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 here. We're at an area where the market has bounced, and we're at the moving average. So, and we have a bull reversal bar at this general area. So for me, this is not a high probability sell. This is the buy zone. Can you still buy above 1 despite that tail? Well, it's less likely to be the low of the day. So instead of 30%, if it closed on its high and then 2 traded above it, it would have a 30% chance of remaining the low of the day for the entire day. With the 3-tick tail, it's telling you that it's not as bullish as it could be. So maybe 25% chance that it will remain the low of the day. Yesterday, when we reversed up here on 6, I said this probably was going to remain the low of the day. But I also said we can pull back deeply. And that's the same kind of thing here. When the situation is not perfect, a lot of times the first leg up is followed by a deep pullback. Why am I not more bearish when we're gapping down 10 points like this, 11 points? Well, because we got a bull bar at support, and the gap is still simply a test of the bottom of the trading range on the daily chart. And it's the first pullback to the moving average on the daily chart yesterday. One thing about yesterday, it's a big bull day. Sometimes you get a big bull day, and then the next day opens near the low and becomes a big bear day. And that's actually a pretty bearish pattern. You don't see that kind of thing often. This is kind of the opposite. A big bear day followed by a big bull day. Although this did not open at the high of the bar, it's still a version of the same thing. It's a big reversal. This is kind of an opposite version of it, a series of bear bars, and then opening way up and reversing. That's a strong reversal. This is an example. Big bear day. Next day opens at the high and closes on its high. And it's a reversal, and it's a pretty big reversal, and it often leads to a swing up. And today would be the opposite, right? We have a big bull day, and then today we're opening near the low of that bull day. And if today becomes a big bear day, that would increase the chances that we've begun to swing down. What's the chances that today will be a big bear trend day? At this minute, maybe 25%. But if we get a couple big bear bars, it goes up 30%, 40%, 50%. But based upon the information we have right now, it's probably 25%. Now, I said not a great buy above 1. And this is similar to yesterday, bull bar on 1, bear bar on 2. The location is terrible for the bears, right? You're right at the bottom of a month-long trading range. If it trades below 2, maybe 25% chance it's the high of the day. So it's very similar to yesterday, 1 and 2. I personally did not take this sell. I don't like selling at support, bottom of a month-long trading range. If this was below the range, I would be more willing to take the sell. This is interesting. Okay, so that is the low there, 60-minute chart. We're breaking below the low of that 4-week trading range. Back to a 5-minute chart. I don't want too many lines. Always in short. Now, there were limit order bulls buying the 1 low, buying the 2 low, hoping that today will be like yesterday. It breaks below the bull bar and then reverses up. We've fallen more below 1 than we did yesterday. And yesterday, 1 closed on its high and 2 went above 1, both bullish. Today, 1 had a tail on top and 2 did not get above the 1 high. This is really interesting right here. Will this get back above the 1 low and let the limit order bulls make money? Or are they going to be trapped, which would increase the chances that today could be a very interesting bear day? Most attempts to break out fail. You can see on the daily chart, we're right at the bottom of a month-long trading range. This bar is important. If it closes on its low, it increases the chances that we've seen the high of the day and that today will be a bear trend day. If it has a big tail, it generates confusion and it increases the chances that we probably will go sideways maybe for an hour or more. When you see it bouncing up and down, up and down, up and down, that's usually a sign of pretty big volume. I just checked, it's like 65,000 contracts so far. So that is big volume. And it makes sense. We're at support on the daily chart. So you get a lot more institutional trading. All right, so clearly always in short. Again, you buy above 4 if it's a bull bar, arguing a second reversal attempt. It would take, I think, a very dramatic bull bar for bar 4 before bulls would buy. Again, that bouncing up and down, up and down, up and down usually is caused by huge trades, 200, 500 contracts, and it results in a big volume on the bar. All right, so what about an opening reversal up, failed breakout below the bottom of the month-long trading range? Right now, I think we're always in short, and probably the best the bulls will get is a trading range. They're hoping that we get an opening reversal up, failed breakout, and the low of the day. They will probably need at least some kind of a small double bottom. You can argue micro double bottom, the tail on the 3, tail on 4, but that's probably not enough for this to be an opening reversal and the low of the day. Can you buy above 4, taking a chance? It's a failed breakout below the month-long trading range and an early low of the day. I don't know that the probability is worth it. You can see here's the past month. We're breaking below the low of the past month. Okay, 3 consecutive bear bars, tails on 1, 3, 4. So there's some buying taking place, but with the 3 bear bars, it's a low probability bet that this is the low of the day. So probably sellers somewhere above 4. The key price right now is the 1 low. You have limit order bulls who bought the 1 low, and will they make money or will they be trapped? If they get trapped, if this cannot get back above that 1 low, it would increase the chances that this is the start of a big bear trend day. What's most likely? Most likely we'll get confusion and a trading range for the first hour or so. Trying to get back above yesterday's low. I think the low of 1 is more important. And if we get 2 ticks above it, that increases the chances that we'll go sideways, and it'll give the bulls a chance to test the 1 high. And if we do get up to the 1 high, the bears will try to get either a double top with the 1 high or maybe a wedge rally up to the moving average, and then they'll look to resume the bear trend. And the bulls are hoping for an opening reversal up. Gap down, trend from the open bull trend. Do not have that. I think today's sell-off is stronger than this one, but plus we went above a high of a bar here, and you can see the result was a trading range day, and today could end up as a trading range day. 3 bear bars and a strong rally. You can call it a double top or a triangle at the moving average. This is what the bears will try to do if the bulls do get a strong breakout. You know, if the bulls get a strong breakout, I want to see the next bar. If it's going to be a bear bar like this, it's good for the bears. They have a chance at a double top or a triangle. That's not like today. This is obviously not like today. This is another version where you get a sell-off, gap down sell-off, and a reversal. And here we get a wedge test of the moving average. And looks like a trending trading range day, upper range and lower range. Again, same thing, a couple of big bear bars, reversal up to the moving average. This was, it just went sideways all day. Anyway, so the bears are hoping to get some kind of, they're hoping that whatever reversal we get will stall around the moving average and sell off. If you do get up to the moving average, that means the bulls are pretty strong. And even though you have a double top, it's still pretty strong bulls. And usually the result is not a very strong bear trend day. You know, this was a bear trend day, but not all that strong. The strongest bear trend days don't pause. They just go down and down and down. And we do not have that today. And today looks more like this kind of a thing. For the bears, a low 1 short, but good bull bar 1, good bull bar 5, not a high probability sell. You know, sometimes you get a huge bear trend after a bull bar like that, bar 5. You know, we did here, in bull bars and sell off, bull bar sell off, but usually not. You know, that's a low probability event. Bull bar, not a great bear flag, did not fall very far. Bull bar became a very big bear trend, but this kind of thing is atypical. Usually if you have a bull bar and the market trades below it, it doesn't go down very far. So we're still on the swing short. You can see we went 1 tick above the 1 low. So the limit order bulls were able to make money. That weakens the bear case. As far as selling below 5, it's a swing short. I am concerned that we have a bull bar 1, good bull bar 5, tail 3, 4, and it's all taking place at support, the bottom of a month-long trading range. It increases the chances that I think we're going to be in a trading range for the first hour. So if we fall below 4, then the bulls will see a wedge bottom, 1, 2, 3. This kind of a thing. This kind of a thing. Strong sell-off, but 1, 2, 3, and then a reversal day. Can you buy the 5 low, 4 low, arguing limit order bulls made money below 1? They'll probably make money below 4 and 5, and that is true. It increases the chances that bulls buying down here will make money. Right now I am flat. I was doing too much talking. If I was not talking, I probably would have sold a point or two above 4. After 3 consecutive bear bars, the odds are high that bear scalpers selling the 4 high stop up here, scaling in, would make money. And you can see we just fell 5 ticks below the 4 high. So buyers or sellers, 5 low. We got 2 bull bars in the first 4 bars, and then 2 other bars with big tails on the bottom. So 4 of the first 5 bars had some buying, and I think that makes it more likely that there are buyers around the 5 low and 4 low. I am suspicious. I think that we're probably going to start to form a trading range fairly soon. So it's a trend from the open bear trend, but the bull bars, the location, and the tails increase the chances that we'll start to go sideways. Daily chart, the bears want today to be a big bear day, and that I think would be very good for the bears. It would increase the chances that we've begun a correction. When you have a 10-point sell-off like this on the open, if you get a reversal, the reversal usually cannot reverse the entire day. The best the bulls can get is usually a test back up to the high of the day. So unlikely to become a big bull day. I said that over here, that when you have a big rally like this and you get a reversal, usually the market cannot get back below the low. But I said usually, sometimes it does. Here, we totally reversed the entire bull trend. Usually when you get a reversal, it does not, you end up with a big down, big up, and the range, it does not get to a new high, or if it does, it doesn't get much above the prior high. So like this, sell off for a couple of hours and a reversal, but could not get back above the high. Big sell off, reversal could not get above the high. Here, it barely got above the high. So the chances are you're not going to get a big bull trend day. Big sell off, big reversal usually does not get above the high. Here, it's not a big sell off. So when you get a reversal, you can get more than a measured move up. And today, this is not what we have. We have a big sell off today. Like not quite that big, but we have a pretty big sell off. VIX. I have a pretty good profit in it. I've been daily chart. I've been scaling in on the way down. I started buying, I forgot where, maybe somewhere in here. I wanted to be buying well below that low. This is the daily chart. Big gap, right? So very bearish. Usually when you have a surprise bar, and this is, I think, a surprise bar. Let me put the bar count back up. Usually when you get a surprise bar, the bulls need at least a micro double bottom before they can get any kind of reversal, and therefore traders just sell. They're selling at the market, selling closes, betting that the first reversal up will fail. Traders are just selling, right? Stop for the bears right now is up here, so anyone selling down here, I think if you're selling here, you have to be trading very small. Stop up here, and you probably have to be willing to scale in higher. Now, what about a parabolic wedge bottom, 1, 4? I think the bulls had a chance for a wedge bottom. They had two problems with it. One is the sell-off 2-3 was big, and then the other problem obviously is the sell-off 7 is big. So this obviously is a parabolic sell kinematics, but okay, parabolic sell-off, parabolic sell-off. This would be more like today, but even this had pretty good buying pressure along the way. Today's channel down is very tight. Even this is better than today. Here, the bulls needed some kind of a double bottom. Sometimes it just goes straight down and straight up, but when it does, the reversal up is usually minor, and the traders looking for a major reversal, they need one more test down. Here we got a double bottom. All right, so can you buy above 8 for the wedge, 1, 4, 8? I would not. I still think the best the bulls get is a bounce. And can you sell closes here? Well, we got a big tail on the bottom of 8. You can argue it's still sell the close, but whenever you get a big tail on a bar in a sell the close type of situation, usually within the next few bars, the market starts to go sideways. So it could start to go sideways here, but probably will not go much lower before it starts to go sideways. Just want to see if I have this drawn in accurately. It's just about right. We got to within a couple ticks of it. That red line is this pullback. This is a 240-minute chart, and it's also a test of here. This is probably more important. Breakout point. So that's why we're bouncing, measured move, and breakout point. Bottom of the channel down here, probably. You can also draw a channel in here. in which case we're already at the bottom of the channel. So that's another reason why we're hesitating here. Bears probably will take partial profits because of the wedge, and for the bulls to buy, I don't know. I think we might get a trading range, so it might be small trading range breakout and then trading range, but I'm not willing to buy with a stop above 8, betting on a parabolic wedge low of the day. I want to say something about the Trump North Korea thing. The market sold off the other day after Trump made his comments, not because they think we're going to bomb North Korea this week or next week, right? However, it does create uncertainty. Think about it for a minute. We got 30,000 troops in South Korea at the DMZ, and a lot of them have families there. And if Trump starts lobbing tactical nuclear weapons over the mountains just above the DMZ, North Korea is going to, fire all kinds of artillery rockets and shells into South Korea, and we would end up losing a lot of families, not just troops but families. And we don't have enough equipment over there to obliterate North Korea in it's just a matter of a few days. And because of that, because we have not evacuated the families, we have not sent in more troops, we have not sent in more ships, there's no imminent risk of the United States suddenly attacking North Korea. So it's not like a war is likely to break out over the weekend. Whenever you get a strong rally, 40% chance you get a breakout in the opposite direction. And sometimes you get a measured move down based upon yesterday's range, which would be right around, no, we're not quite down there. There's the measured move from yesterday's range. So we got support in this general area, but that's an 8-point area. For the bears, 9 is similar to 5. It's a sell signal bar, but it's a weak sell signal bar, and now we have a parabolic wedge bottom. A lot of bears will not take that sell. And if you're an institution, you might buy that 9 low, but individual trader, I think it's probably not worth taking the buy. So why are we selling off? What's the news? It's not the news. News can be a catalyst, and you can say that Trump's comments the other day was a catalyst for the sell-off. But the reason we're selling off is for the reason I've been saying for a long time. We're selling off because this is too extreme on the weekly chart. The market keeps probing, how far is too far, up or down. And I thought we were too far here, and now we're even further. And the reason we're selling off is because we've gone up too far, and there just are not enough buyers up here. The market has to go lower to find buyers, and sellers are getting more eager up here. This is the weekly chart. Where will the buyers come in? Well, in the daily chart, they'll come in at a breakout point, which is where we are here, or prior higher lows, major higher lows. I think that over the next couple of months, this is where the market's headed. Globex chart, you can see a parabolic sell climax, 1, 2, and 3, nested 1, 2, 3. All right, possible low of the day, so it's not crazy to take the buy. It's just, I think, a pretty difficult thing to manage if you take that buy. And for the bears, while they sold the 4 high, they will be less willing to sell the 9 high. Okay, risk of that, this, that, and I'm not the only person who knows this stuff. Everybody does. And possible low of the day, probably minor reversal, but the next few bars are important. If we start to get 2 big bull bars or 3 or 4 small bull bars, then we're probably going to get up to the top of the sell climax up here. Still always in short, but 2 big bull bars closing on their highs, 3 or 4 small bull bars would increase the chances that we're going to get the reversal. Here we had bad follow through after the bear bars, and that allowed for an immediate reversal up. Today it's more like this. We don't have that bull bar. I'm trying to find. Okay, here we had to get a second leg down. Here we got, this is kind of like what the best of the bulls probably will get. If they do get a rally, they'll probably need a major trend reversal. So bears are going to sell the rally. Here is about a 50% pullback and the test of these lows. Who's going to sell below 10? Probably buyers below 10. We have a gap 4 low, 10 high, and we're almost to the measured move target. And if we do fall below 8, I think there'll be buyers below, and it might be buyers below 10. Right now, I think it's more likely we're not going to fall below 10, and that a reversal down here will probably fail and will probably go higher. Just like it was important that 5 went above the 1 low. We have a gap 4 low, and if the bulls get above that 4 low, that would greatly reduce the chances of today being a very strong bear trend day, and it would reduce the chances of significantly lower prices for at least a couple of hours. What sometimes happens is you sell off and you start to enter a range for 3 hours, and then later in the day the bulls will see a major trend reversal set up and they'll buy, and the bears will see a double top bear flag and they'll sell, looking for trend resumption down. Here the bears had the double top bear flag, trend resumption down was weak, not consecutive big bear bars, and then the bulls got a double bottom and a reversal up. So this might be the next few hours, sideways and then trend reversal up or trend resumption down, end of the day, 50-50 chance. $57,000 contracts, 65,000. Do you remember how last week a lot of the bars had 1,000 or 2,000 contracts, and I said that is not going to last, that the computers are still there. So even though you get some bars 3 ticks fall, 2 ticks fall, what's the volume there? 4,000 contracts, 2,000 contracts. Even though everything is very quiet, the computers are still there, and at any point they could start to trade heavily. Okay, do you look at this and sense some confusion? Right, we got consecutive sell climaxes. We have a gap down, a second push down, a third push down, sell climax, bigger sell climax, and then bull bar, tails, bull bar. Do you get some sense of confusion? You should. right? And because your radar is telling you that there's something wrong with this sell-off, that means you probably believe there are buyers not too far but down, sellers not too far up, and therefore we're probably at the start of a trading range. Low one short, we have a gap, might get a second leg down. This is far below the moving average, 3 bars with tails, a bull bar here. I think it's not a strong short, too far below the average price and too much buying. What happens if it just collapses from here? Well, I'll miss the trade. That's fine. Final bar of the hour, 60-minute chart. That green line is that breakout point over here. We had a trading range and we broke above it. And right now the market's deciding whether we're going back into the range, down to the bottom of the range, or are we going to test into the range and then reverse back up, double bottom. We also have this trend line. We're pretty close to it. So far, 5-tick trap. It's a decent bear bar in a bear trend. Odds are the bears will make at least a 1-point scalp. So the odds are we're going at least 1 tick lower. But I think we're probably going to start to form a trading range soon. So the bears got their 1-point scalp. Are they going to hold for a swing, or are they going to scalp? I think they'll probably scalp, so probably buyers around the 10 low. Can the stop order bulls buy above 12 if it's a bull bar closing on its high? It's a little tricky, right? It's still a minor reversal. You certainly could buy hoping for a swing up to the moving average in the 6 high. The market's right now deciding whether we're going to reverse up here or form a trading range down here. Are we always in long yet? Not yet, but if we got a big bull bar on 13, that would probably make it always in long, and it could be the start of a reversal day. I took profits on some of my shorts here. The shorts that I've been putting on over the past couple of weeks. Bulls need to reverse this. They need a big bull bar. They need to create a reversal day. They need something like that, like this, like that. like that. If they get that, then we're probably always in long, and we'll probably have a swing up for the remainder of the day. Bears gap open below 4 and trying to create a low 2 short, but two good bull bars, 10, 12, that will scare a lot of bears and make them not want to sell below 13, increasing the chances of sideways. It's confusing. We went down, we went up. No, we went down, we went up. Now we're going down again, right? Trading range behavior. It's reasonable to buy the 13 high, although I did not. But institutional traders who can use wide stops, 10 or 15 points, will hold. They will not get out below 13 or 8, and they'll let the market have another leg down, and then they'll look for another bull bar and buy more. So they'll buy here, and then they'll buy more on a reversal up somewhere down here. And the odds are they'll avoid a loss, and they probably will be able to make a profit. So even if we sell off here, we'll probably come back here within an hour or two. Bulls want a bull body, right? For them, they're hoping for a reversal day. So they buy above 12 or above 9. And they're hoping that within the next 2 or 3 bars, we suddenly get a give-up bar. The bear's giving up, and becomes a big bull bar closing on its high. If they get it, that would flip the market to always in long. Okay, so the bulls got the minimum. They have a bull body for their entry bar. They have a parabolic wedge and a micro double bottom. And for the bears, it's a low 2 short, but a bull bar plus other bull bars 10 and 12, and then at support, the bottom of a channel, measured move, and testing the June high, the breakout point. Are we always in long yet? We probably need one more bull bar, especially if you get a big bull bar. What about taking the low 2 short? I would not. And because it's a bad low 2 short, 14 probably will not go below 13. Probably too many buyers there. Bulls will buy it before it gets there. I keep going back to these reversal days because we've had so many, and this looks like it's doing the kinds of things that you'd want to see for a reversal day. So this looks like at least a 50-50 chance of becoming a reversal day. Reversal into a trading range, but still reverse the selling. Reversal, just channeled up all day. Reversal into a trading range. The bulls need that one bar. They need a give up bar. They need a big bull bar, which would represent the bears giving up on the bear trend. Low 2, but 4 bull bars. I think this is a tricky trade. Let's say 15 ends up with a bull bar. That probably would make it always in long, even though we're still below the moving average. Sometimes you need 3 bull bars, sometimes you need 4 bull bars. So I think this is an important bar. And if the bulls do get a bull bar on 15, 16 might be a bull breakout. It might be enough to make the bears give up. At this point, when you look at this, are you thinking, wow, this is really going to fall far from here? Or are you thinking, too many bull bars at support? This may become a reversal day, and therefore it's probably not going a lot lower, and it might get all the way back to the low of last week. Let's say 15 closes on its low. I think a lot of the bulls will get out. You got a low 2 and a bear trend. And if you got a decent sell signal bar, let's say 15 closes on or near its low, I think a lot of the bulls will exit. It's really interesting how important the little close is, right? And the bulls were able to prevent a bear body. So good for the bulls. Not a lot of bears will sell below 15. The bulls could have created a stronger reversal. They could have had an easier buy setup. Some of the examples I showed had I'm trying to find, like some had obvious, very strong reversal bars and very good entry bars. That's not what we have today. But I think we're always in long. What happens if we get down near the 12 low? Probably buyers down there, because a lot of the bulls consider the double bottom 10, 12 as a pretty major event, and therefore they will try hard to keep it as the low of the day. By the way, part of the reason why I took profits down here was I took profits on August SPY puts, because they expire in about a week, and I'm not sure that it will go down much more. This is a gift. So usually if I'm holding puts or calls, I don't want to hold them into the last week, because the time decay tends to get very rapid. I think the market's deciding whether to get the reversal here or form a trading range and then get the reversal. Now, I understand the argument that it's a low 2 and a bear trend and double top with 5, and that we could just channel down all day. But I think because of what we've had so far today, it's more likely the best the bears get over the next several bars is a test down to around the 12 low and a trading range. So I think we are always in long. For the bears, they have a decent sell signal bar. They have a bear inside bar and bear II, and they have a low 2. Not quite to the moving average, and they've allowed a lot of bars up. When you get something like a double top bear flag like this, a lot of times you'll get a fairly strong rally, and then you get about a 40% chance of the swing down, and that's probably what we have here, maybe a 40% chance that we break to a new low and just go down for the measured move. So 60% chance, we don't. We stay in a trading range. Strong rally, double top. Rally, slightly lower high, double top. Decent rally, double top. strong rally, double top, strong rally, double top, strong rally, double top. So when you get double top bear flags, that rally, the second top, is often strong, and sometimes it makes the market always in long. However, I think in general, there's a 40% chance you're going to get a swing down, below the low, and a trend down. 60% chance you will not. That will probably enter a trading range. So when I say 40% chance we're going to break below the neckline 8 and fall for a measured move, what I'm saying is this is probably a minor reversal. And that means I think we're probably in a trading range. Might be in an early bull trend, but to me it looks more like a trading range. Blue Apron is one of those companies that sells dinners. My kids all get their dinners from companies like this, where they drop a box of stuff off at your door, vegetables and meat, and you cook it yourself. Anyway, we had that. This is an IPO, just opened about a month ago. And, we had that big reversal yesterday. And instead of follow through buying today, you can see we gapped way down. I do think we'll probably bottom out somewhere around 5 and then bounce. I don't think it'll be a bull trend, but it'll be probably like GoPro that just became dead money for a long, long time. So IPO, rally, sold off, and then dead money for over a year. Are we back to always in short yet? No, I think the bears either need a big bear bar or 2 or 3 small bear bars. I think this is probably a trading range or a bull channel. 40% chance it's a resumption of the bear trend. I talk about selling closes here, and with that big tail, still sell the close, but only if you can manage your trade. A lot of the bears disappointed by 9, certainly disappointed by 10. Some of them sold more higher, and then when it got down to their original sell at the 8 close, they bought. When you get a potential double top bear flag like this, it often sells off, and the sell-off just never looks all that convincing, like this. Never looks all that strong. Tries to reverse, but it can sell off relentlessly. If it does fall for the measured move, usually you get a reversal. Bulls hoping for a higher low, and the bears want this to just drift down to a measured move down. Probably minor reversal. 3 bear bars. Are we always in short yet? I don't know. I still think it's more likely that this is a trading range and this is a higher low. I think the 3 consecutive bear bars lowers the probability for the bulls. I'm currently flat, and it's a higher low, probably a minor reversal, but because of the possibility of a lopsided double top and an endless pullback from this bull reversal, I'm not planning to buy above 19. It's a possible low of the day, but the 3 bear bars are enough to make me wait. We're probably back to always in short, but Is it a bear leg in the trading range or a swing down? Swing bears can hold short, stop above 16, but it's still probably a trading range and not a bear trend. But with the 4 bear bars, I think a lot of the bulls will wait for at least a micro double bottom before buying. With the 4 bear bars, I think probably sellers here, so I would not take that buy. It's a possible higher low and low of the day, but bear trend below the moving average, 4 bear bars. To me, the probability of this is too low. I sometimes will buy above 4 bull bars, but only if we're in a strong bull trend above the moving average. I don't want to be buying above 4 bear bars if we're below the moving average. Remember back here I said even though it's a parabolic wedge, it's probably a minor reversal. And I said we probably would go sideways. And it's possible that we'll go sideways for 3 hours or so. And then the market decides whether to resume the trend down or reverse the trend up. I think that the trading range will probably go on more. I think probably more sellers above 19 than buyers. Seller closed bears, bar 20, got filled 1 tick below, and they needed to fall 1 more tick to make their money. For the bears, they have a low 2 bear flag here, a bear breakout, and a pullback. But it's also the bottom of a trading range, and I think you only sell below 20 if you're trying to swing down, hoping that this is the start of an endless channel. I still think 60% chance it's not. 60% chance we're probably staying sideways here. What happens at the 12 low? Do we break 2 or 3 ticks below it? That would increase the chances that we're going to fall for a measured move. I still think more likely this is a trading range and probably buyers below 20 and around the 12 low. What happens if we get a big bear bar closing far below the 12 low? Well, then we're probably going to fall for a measured move down. The bull's trying to bottom here, and if they fail, instead of getting a measured move up, the bears will probably try to get a measured move down. This is the buy zone, similar to yesterday. I said probably buyers here, probably buyers here. Bottom of a trading range, bottom of a trading range. Bears want the breakout, bulls want the reversal. It's a trading range bottom, so it's slightly more likely that it'll remain a trading range and the bears will not get a successful breakout. That will get a bounce in the next few bars. The bulls need a good buy signal bar. and the bears obviously want to get at least a couple ticks below 12, and they would like a big bear bar closing on its low, hoping for a measuring gap. This is one of those low risk trades where you buy the market and put a stop a tick below 12. Whenever you have a small risk like that, you're probably going to lose, but the math is still okay. So, you risk in 2 or 3, 4 ticks, betting that you'll get a double bottom, break above the neckline, and rally for a measured move up. So you're risking, 3 ticks to make 10 points. Probably you're going to lose 70% of the time, but the 30% of the time that you win greatly offsets that 70% of the time when you lose. I think most traders should be not doing that, not taking the limit order buy. Instead, wait to see if they get a stop entry buy. Wait to see if 23 is a bull bar closing on its high with maybe a 3-tick bull body. This is getting near the end of the second hour. Bear is trying to get a follow-through bar. We have a trend line just below on the 60-minute chart, a magnet, so we probably will get there. I don't know that we'll get there today, but we'll probably get there in the next 2 or 3 days. Good bar for the bears, trying to get a strong breakout below the 10-12 double bottom. Is it sell to close? I don't know. I sold the 20 close and scalped. I'm back to flat, but the reason why I'm not selling this breakout is too many reversals. It makes me think trading range. This is 23, a big enough surprise, probably going at least a little lower. Suppose 24 is a bull inside bar, lower low, major trend reversal, high 219, but 3 bear bars here, 4 bear bars here. I'm not going to take the buy. I'll wait for a second entry buy. You can see they bought the 8 low and made money. Now, what about selling 24 close, betting minor reversal? It's too low. This is a tight channel, probably a minor reversal, and therefore unlikely to go straight up. But I still think trading range is likely, trading range or a broad bear channel, and I don't want to be selling too low, and I don't want to be buying too high. And buying above 24 in a tight bear channel here, even if it's within a broader bear channel, I don't want to be buying up there. 9 ticks above 8, that means some of the buy the low bulls scalp for 2 points, and the range is big enough. That's the buy signal bar. Good buy, and good bar, not good buy, but good bar, like 10 and 12. We have many pretty good bull bars today. That reduces the chances that this is going to continue down in a big bear trend. And it makes it likely that we'll be in a trading range. Right now we're in a bear trend, either a bear channel or maybe a trading range. If we did not have those 3 bear bars, I probably would buy this, but we do have them, so I'm not buying it. A breakout pullback short, but probably buyers below. They bought below 11, they bought below 8, the bulls made money buying below 4. We know they'll buy below 23, the low of the day. They might buy below 25. I think they probably will. I think it's not a strong breakout pullback sell. Close of the second hour. Again, tail on the bottom of the bar. Again, testing the June high. You can see the buyer's 25 low. The bulls need a very big bull trend bar closing on its high if they're going to get a reversal up rather than a trading range. Bear channels and trading ranges are very similar. This is a bear channel, and I suspect it's also a trading range. And the bulls have bought the 25 low scalped. So they don't have a lot of conviction. They're still holding below the moving average. I did not take this short. So right now I'm waiting. We still have that magnet of the trend line on the 60-minute chart. And we might not be able to escape the gravitational pull. We're still, I don't know, about 4 or 5 points from it. So I don't know if we'll get there today. We probably will get there in the next day or two, either by going down or by going sideways. This is, I think, similar to today. Strong sell-off, pretty good bull bars, and market stayed sideways. We got a reversal up. You don't always, sometimes, here, actually that's trend resumption up. Here, trend reversal down. Sell-off, a rally, and then trend resumption down. Rally over 2 days, trend resumption up. Now, who's selling right here? I think only an institution would do that, right? Individual traders. This is the buy zone, bottom of potential trading range. Stop entry bears, not a good sell below 26, not a good sell below 27. 27, you're selling below a bear bar, good, but you're right at the bottom of a potential trading range, and you are at the bottom of a bear channel. This is, I think, a buy zone, but the bulls would like to get a bull buy signal bar. If we do get one more push down, it'll probably lead to a wedge reversal. Less likely, we'll get a breakout and a measured move down. More likely, the market's trying to convert into a trading range. and it's deciding whether we get one more push down to a wedge and then reverse up, or reverse up here from a slightly higher low, which is a type of wedge. Sometimes when the probability is high that the market's trying to form a wedge bottom, the third push does not fall below the second. So you get a slightly higher low, but it's the same forces that take place with the wedge. And if you get the higher low, it simply means that too many traders were eager to buy the wedge. They were afraid the wedge might not get a lower low, and they started to buy with limit orders above the second low. This is what I was talking about, right? So let's say we have a 2 or 3 tick bull body on 29 with a close on its high. It's certainly an okay swing buy looking for a test of the top of the wedge, and the probability would be high enough for a scalp as well. Now, what happens if 29 is a good-looking bull bar and the market trades 1 tick above 29 and then goes outside down? I think you probably would get out below 29, and then if it immediately reversed up again, you'd buy again. I think the market's trying to convert from a bear trend into a trading range, and it has a potential wedge bottom here. You can see they bought the 23 low, just like they bought the 8 low. You'd expect that. You can see the 60-minute chart very close to the bull trend line. I would feel better about buying a reversal up if it first fell below that trend line. So that increases the chances that even if 29 creates a credible buy, that it might reverse soon, immediately or soon, and go down a little bit more. So to me, this looks like a wedge bottom that has a higher than average chance of failing, getting one more push down. In general, if you get a bear breakout below a wedge, 50-50 chance you get a measured move down, 50-50 chance the bear breakout fails. In general, I think there's better than a 50-50 chance that there are buyers below 29, buyers below the wedge. So if the wedge triggers the buy above 29, and then the market goes down and hits the stop below 29, I think better than a 50-50 chance there are buyers below. We have that bull trend line over the past couple of months, just a little bit below where we are. To buy above 29, I'd want it to be perfect. Here's that same trend line on the daily chart. It looks like we're there. 60-minute chart, we're not there. But remember, the 60-minute chart, even though it's calculated using bars in this day and bars in this day, there are 7 bars during the day, and the 60-minute bar it does not always correspond with the low of the daily bar. So a lot of times you'll get a trend line that is similar on 2 different time frames, but not exactly at the same price. Here's the first point for the 60-minute. Obvious, good. This is, I'm sure, the exact same price on the daily chart. This is the first bar of the day. And so I'm sure this is exactly the same price for the low on the daily chart. I am not sure that this is probably the same. This is probably the exact low on the daily chart as well, because it's the final bar of the day. I'm going to do a close-up of that. And the daily chart, we did hit the trend line. I drew the line using this low, the 60-minute chart. I used that low. Let me zoom in on that and see which is the correct low. This is the correct low on the daily chart. Daily chart hit the trend line. I think a trend line that goes back several months like this, most traders are using the daily chart, not the 60-minute chart. So I think the 60-minute trend line is less reliable. So I think we've tested the trend line. So even though I have it drawn on the 60-minute chart and you can see a gap, I think this is what more traders are looking at, the daily chart. Now let's say we're going to bear a bull inside bar 30. Are you going to buy above 30 for the wedge? Well, you got the same problem that you had here. 4 bear bars, 3 bear bars. Here we have 3 bear bars again, and a lot of bulls, even though it's a wedge, a lot of bulls will not buy after 3 consecutive bear bars and a bear trend. They'll want a micro double bottom, or they'll wait to see a strong reversal up and then buy closes. Okay, so pullback from the break to a new low of the day, but a bull bar. Would I buy it? I'm not going to buy it. We have those 3 bear bars. I want to get a micro double bottom with a stop entry buy. Do I think it's okay to buy? Yeah, I think it's unlikely that we're going to get a big breakout bar 31 and then a measured move down. I think it's more likely we're trying to form a trading range and spike, pullback, wedge channel. Channels usually get bull breakouts and evolve into a trading range. So I think we're soon going to evolve into a trading range. Micro double bottom, but I think the bulls want to buy above a bull bar. 30 is a bull bar, so if it goes outside up, theoretically, bulls might buy above there. For the bears, breakout pullback short below 30, but I would virtually never take that short, a bull bar and a wedge bottom. I would wait to see if we get a big bear breakout and then possibly short. So what do you do here? I think if you're short, I would get out of shorts above a bull bar. Let's say 32 closes on its high. We may go outside up here. It might be similar to 64 yesterday. And for the bulls, is it worth a scalp buy above? If it's outside up, I think it becomes more difficult. But if 32 closes on its high, certainly an okay swing, looking for the market to work up to the top of the trading range. I'm not sure that the probability is high enough for a scalp. If it closes on its high, it probably is. You got right here, you got an 8-bar bear micro channel, and that lowers the probability that we'll go straight up. Can the bear sell the 32 high? No, I would never do that. Too far below the moving average, too many bull bars and a wedge bottom. Now we have a micro double bottom. So the issue is what to do with buying, and I would buy back shorts. If it has a 3-tick tail, would I still get out of shorts? I would, because the context is good. I think we have a spike in channel. Channels usually evolve into trading ranges, and therefore this is probably a bear leg in a range, which means we're probably going to get a bull leg in the range. I'm not sure that this is the final bottom. We may go up a little bit and then break below the wedge and then reverse up a second time. but I think over the next hour, we're probably not going much lower. Because of this tight channel and this entire tight channel, this is one of those wedge bottoms that has a higher probability of failing. So it triggers the buy above 32, and then within a bar or two breaks below 32. If that were to happen, I think at least a 50-50 chance, maybe 60% chance, the bear breakout would fail and we would reverse up from a failed wedge bottom. As you can tell, I'm not expecting the market to fall much more over the next few bars. Bears double top 30. 50-50 chance we fall below 32. And if we do, I think buyers below 32. Always in bears theoretically have to sell again below a bear bar, maybe 33. I would not. I think we're probably going to go sideways to up either here or after one more push down. Too many good looking bull bars, so it makes me think we're going to get a bull leg in a trading range. The tightness of this channel, I think, lowers the probability for the bulls and increases the chances that we'll get one more new low. It's hard to see that this is a very tight channel, but it is. All right, so this is an upside down version of the chart. Wedge 1, 2, 3, but pretty tight channel. And that reduces the chances that we'll go straight down and makes it more likely that we'll go sideways. Maybe we get one more push up before we reverse. But because it's a very tight channel, you can see I can draw a line from this low, these lows. I do think we'll get a bear breakout below this channel. Remember, this is upside down, so I'm talking about a bull breakout on 5 minute on the E-mini. But this does not look like a strong reversal despite the wedge 1, 2, 3 because this part of the channel is so tight. For the bears, double top 30, but micro double bottom. I'm not willing to sell down here. This is the buy zone, and my only question is whether the bulls will prevent the market from falling below 32, or if we fall, I think that's the question. And if we do fall below 32, I think probably buyers below 60% chance the bear breakout below the wedge will reverse within a bar or two after falling below 32. 40% chance this will become an even bigger bear trend. Yeah, I mentioned that. I said that I've been accumulating shorts over the past couple of weeks. VXX can handle tremendous volume. Here's a 5 minute chart of the VXX, and 2 million contracts, 2 million contracts, almost 2 million contracts on every bar. So you can throw thousands of contracts at the market and get filled without moving the market at all. All right, so buyers or sellers below 32. I think probably buyers below. This is what I was talking about, that the channel is so tight that there's a higher chance the wedge would fail and we would go below the 32 low, but 60% chance buyers at the 32 low instead of sellers. 40% chance traders will sell this low. This looks like one of those flushes to get the weak bulls to exit, and then the market reverses up. So this is actually bullish, I think. And if we reverse here, I think it increases the chances that we've seen the low of the next couple of hours. Here's time and sales on the VXX. You can't even follow it. The stuff is coming through so quickly. But, a lot of, 2,000, 5,000, 10,000 share trades. Sometimes you see 20,000, 50,000 shares, and it still doesn't even move a tick. So it's one of the reasons I like it. Now, if you're a bear, you're looking at this and you're saying, oh, it's a failed wedge. And you're thinking, well, where's the big bear breakout? Why is it not collapsing? Anyway, 60-minute chart finally got that trend line. So not only do we get the trend line on the 5-minute chart, we've now hit the bull trend line on the 60-minute chart. Bulls want another bull bar. We got two big bull bars, 10, 12. We have a bull bar, 32. The bulls need one more bull bar. And bears obviously want the channel to continue down all day. I think the close today is important. Daily chart, big bull day yesterday. If today closes like this, near its low, that would, I think, increase the odds that we've begun the move down to the May or March lows. Obviously, we have to get below here first. It's funny, they had this guy on Fast Money yesterday, Rick something or other from Overcore. I think the guy's a clown, and I don't take him seriously, but he's good entertainment. Anyway, he was saying that he was looking for a 3% correction, which would be down to here. And I think more likely this is where we'll be within a couple months. The VXX, by the way, is triple leverage. So, we could easily, on the VXX, go up to 14, 15, or 16. Here's the VXX daily chart. Okay. I've been buying through here, and, we could easily go somewhere up in here, which on a percentage basis is huge. So if you bought down here, there's $1, $2, $3, $4. You can make a 40% gain over the course of the next month or two. Market's trying for a bottom, and it's trying to evolve into a trading range, which it probably will. But, personally, I would like it to go sideways for a few bars instead of just reverse up. But because whenever you're in a tight channel and you see reversals, like this, to me, the odds are they're going to fail. So I'd rather have it start to go sideways and stop going down, and then get a buy signal. Limit order bulls, probably buying lows. 32 low, 34 low. The reason why a reversal can be sharp is traders expect that the wedge will evolve into a channel. And once everyone concludes that it's not going any lower, all the bears suddenly buy back their shorts and all the bulls start to buy. And you can get a give up bar, a big bull trend bar, and then at least a second leg up after that. The bulls they need, this tight bear channel is really a problem for the bulls. A lot of bulls will wait for the strong reversal up and then buy, or they'll wait for the market to go sideways and then look for some kind of a micro double bottom to buy. And bears, they're not selling at the lows, or they're not selling much. They're selling the reversal attempts. They're selling above bars. I've stopped selling. I'm looking to buy. I did not buy the 32 low. I'm looking for a stop entry buy. I did not buy the 32 high, but I am looking to buy. First target, moving average, and then the lower highs in the bear trend. Right now, it does not look like we'll get there, but if we get a strong enough reversal up, then that becomes possible. The big issue is, this daily chart. Have we begun the correction? And if today closes down here, everyone's going to be talking about a correction on TV. Most of the people will be saying this is the target, but I think they're wrong. I think the target is here. Bulls, I think, need a close on the high of the bar. It would be a higher probability buy than 32, because now it would be a failed wedge bottom. But if it's not a really good bull bar, I think traders should wait. Netflix, a couple of weeks ago, broke strongly to the upside. And I was listening to everybody on television say, you got to buy it. You can wait a few days, but you got to buy it. And I'm looking at that and I'm saying, that's a bull breakout of a bull channel. Right? Is that a buy? No. It's 75% chance it's going to reverse and get down to the bottom of the channel. Collapsing, which is good for my swing positions. But I want to trade the 5-minute chart, day trade as well. And right now, it's not strong enough down for me to sell, and the channel is too tight for me to buy. So right now I'm stuck. Daily chart. This dotted line is the 50-day moving average. Support, 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 support. Is it going to be support now? I don't know. I don't think so. Weekly chart, bottom of the channel here, and right now it's around that target that I've been talking about. This is the weekly chart, in the 2400 area right now. Actually, no, I've been talking about down here, so I think we're probably going lower. So I think we'll break below the channel, but we'll probably bounce here at the higher low and the bottom of the channel. This is the open of the year. We might get there, but the bears have to do a lot more before traders think that's possible. I do think this is likely somewhere down here. I remove lines when the market ignores them. I don't want too many lines on the chart. This is a measured move down from yesterday's range, from the high to the low. Okay, gap on July 12th. Okay, so that's that gap right there. That's an obvious target. Well, I'm trapped out. I'm not willing to sell closes at the low, and it's not, the channel is too tight, so I don't want to buy. Although it looks far, when the market's in a strong trend, it just tends to reach every target. This is that double top measurement projection, a little bit lower. When the market does have a double top bear flag that reaches the measured move target, it usually bounces around the target. So double top, neckline, bounce. Double top, neckline, not much of a bounce, and then another double top here, here, reversed. Double top, measured move, reversed. Well, can you buy above 38 and put a stop 3 ticks, 2 or 3 ticks below the measured move? I think it's just really difficult to make money when you're buying in a tight bear channel. Here, here, here. Obviously, everybody knows it's not going to last forever, and it will either become broad or a trading range or even a reversal. But picking the exact low, if it's not a very dramatic reversal, it's a low probability bet. It's still sell the close, but this is, 5 bars into sell the close. I would not sell down here, too far below the moving average. I want to check leg 1, leg 2. So leg 1, just around leg 1, leg 2 also. Do the always in bears get out above 38? Well, I don't know. I think we're still always in short, and I think any reversal here probably will be minor. Unlikely. You can argue that it's so climactic that we're getting a bear breakout below a bear channel, and therefore we'll get a major reversal. I think even if we rally sharply, it'll be minor, and that we'll have to test back down. I'm looking to buy. I did not buy, and I'm not willing to sell. This is 6 bars into a bear micro channel, and this is climactic. So it's too low for me to sell. Wilbeck's chart keeps selling off. Let me just look at a measured move here. What about here? We have a gap. We're beyond a measured move. I think probably good to get out of shorts here, but to buy, I'm waiting. I'd rather buy with limit orders or after a strong bull reversal, which I think we're going to get because this is a spike in channel sell climax. So I think it's going to evolve into a trading range. The bulls tried to make the trading range up here, but then we melted down in an endless pullback. So now the target for the bulls maybe is here, maybe here. "15-minute chart, a reversal bar closed above the midpoint. So spike pullback, parabolic sell climax, but only a doji, no buying pressure in 8 bars, or no good bull bodies in 8 bars. Stop order bulls made money, so that's good. How many bars before always in long? A single huge bull bar could do it. The context is good for the bulls, but they need to do more. What about the 20 gap bar bears? It's been 40 bars since we've touched the moving average. There'll be some bears there, but this is a sell climax, and a lot of traders will probably wait for a couple legs up before they sell. I would not sell below 40. It's probably okay to buy, but you can see we went back above the 32 low, so the bulls above the 32 low bought more lower, made money. Traders probably will buy the 40 low and the 38 low and more lower. If you cannot do that, I think it's more difficult to make money. And for the bears, it's just too climactic. We're getting a bear breakout below the channel. It's too climactic for me to sell down here. If we get a couple legs up to the moving average and a low 2, I might sell that. 3 bull bars, 4 bars up. I don't know that it's always in long yet, but it's a good candidate for the low of the next hour or two, maybe until 11:30 or so, in the start of a trading range. Probably buyers below 41. 20 gap bar bears looking to sell around the moving average. They'll sell a strong bull close near the moving average. Who thinks that this is the start of a bull trend for the rest of the day? I think most traders do not. A very tight channel. Usually the first reversal up is minor, which means bear flag or bull leg in a trading range, and then later in the day the market will try to test back down. If we get a surprise huge bull trend bar, then the odds are this will remain the low of the day. Right now the odds are whatever rally we get, maybe 5 or 10 bars, will be followed by a test back down. And so this will be a minor reversal. If you get a strong enough minor reversal, when the bear trend resumes, traders will start to think that the next reversal could be major and lead to a bull trend. We'll probably get back to the 32 high, whether or not we pull back first. I think it was reasonable to buy the 32 high. And whenever the market does something that is reasonable, it usually allows scale in traders to make money. For the bears, a low one short, but 6 bars up or 5 bars up, probably buyers below, and we'll probably get to the 32 high before we get to a new low. So probably buyers below. Suppose 42 is a big bear bar closing on its low. Well, then traders will probably not buy it. Probably buyers below. That is, I think, a reasonable target. It's around the moving average, so you'll get some bears selling there and here, but when we do get a reversal down, I think traders will be buying, looking for a second leg up. This is a sell climax, so the odds are we'll get a second leg up. I bought the close 41, trying to make 2 points up to there. Even though probable minor reversal, it's so climactic, the odds are we'll get 2 legs sideways to up. And even though the bears have a 20 gap bar sell, probably if we reverse down, we'll get a higher low and then a second leg sideways to up. All right, so we're at the target, the first target. Might get a measured move up. Probably we'll get a lot of profit takers here. Measured move up takes us up to the 14 high. But should be some profit takers. Plus you get the 20 gap bar bears selling, even though we have 5 decent bull bars. Probably always in long, because probably bulls will buy the first test back down, and we'll probably get a second leg up. So where do the bulls buy? Well, we have 5 consecutive bull bars after a sell climax. So I think we're always in long for a second leg sideways to up. The bears want another double top bear flag. We have a double top here, fell for about a measured move. They have another double top here. But because this is a sell climax, we have a bear break below a bear channel. The odds are we're going to get 2 legs sideways to up. It could be simply sideways, but probably buyers below 44 and somewhere in the middle of this bull leg. Do I think we'll get up here? I don't have an opinion. It's too early to tell. I think the bulls probably will need a major trend reversal first if they're going to get up here. The bulls want the pullback simply to be sideways for a few bars. However, we may get a 50% pullback, and we might test the buy signal bar high, 38 high. Let me put that 50% back just in case we get there. Double top bear flag, and then another one kept going down. This is, I think, a much stronger bear trend than today. Double top bear flag. We're on a measured move, bounced. Double top bear flag, and then another double top bear flag, double top here. You can call it a triangle. Tried to get a double top bear flag, it failed. Tried to get a double top bear flag, became a head and shoulders bottom. Double top bear flag, I think this might be like today, where you get a reversal and then form a higher low and get a second leg sideways to up. I'm not expecting a big reversal like that. I'm expecting more a trading range. For the bulls, higher low, not enough bars for a major reversal, and therefore probably another minor reversal. We might go sideways here or sideways to down, but probably right now we've probably seen the low of the next hour or so. Bulls trying to avoid 3 consecutive bear bodies, which would encourage the bears to sell, but I think it's enough of a reversal so that probably buyers somewhere around where we are, and probably a second leg sideways to up. Buying above 46, I think stop is below 38 because enough big up, big down, so we might get 2 or 3 legs down. What do the bears do? I think they need at least a micro double top. I do not think many would sell here despite the 20 gap bar short. Buyers or sellers, 46 high. I suspect we're going to go more sideways. So I think probably sellers somewhere around here, but I also think we're always in long and traders want to buy, so I'm hesitant to sell. I'm more in buy pullback and scalp mode. 2 legs up were likely, and this is the minimum needed for the 2 legs. The bulls want to get all the way back to the top of the wedge, and they might. I still think we're probably going to go more sideways here. That traders would be more interested in scalping than swing trading. Might be too many traders trying to sell 44 high, higher low, but not enough bars for major reversal. So whatever rally we get here is probably part of a developing trading range, not the start of a bull trend. This is the sell zone around the moving average. %50 pullback. I think we're still always in long. I also think it's more likely than not that we've seen the low of the day. So if we do sell off, we'll probably form a double bottom or a slightly higher low. It's a triangle. It's a small double top. It's a triangle if you count that high. I still think the odds are it will result in a higher low. For the bears, it's a double top neckline. Measure move down to near the low. What are the chances of bear trend resumption? I think more likely we'll try to get a major trend reversal. So first leg up, and then trying to get a higher low. Strong enough breakout, might get a small second leg down. I think we're probably only in a scalping market here. Probably buyers below 46, buyers below 38 if we get there. For the bulls, high 2 buy, breakout test, 38 signal bar high. Strong enough bear bar, might get a little bit more down, but probably will form a higher low. This is, I think, a buy zone, 46 low, 38 high, 39 low. Strong enough breakout, probably better to wait to buy a second leg down. If obviously we get a second big bear bar, I'll change my mind. But as long as 52 is not a big bear bar, I still think the odds are we're trying to form a higher low. If we do get the higher low, I think a trading range is more likely than a second leg up to the top of the wedge. Buyers or sellers below 52. The bears want the measure to move down, but I think we're in a trading range, and I think we'll probably form a higher low, so I think probably buyers. For the bulls, a wedge higher low, major trend reversal, and for the bears, a second leg down from the breakout 51. But even if we go to a new low, there probably are buyers below. We've been sideways now for over 20 bars after a buy climax. Sell climax. Well, the bears is still a double top, and they're hoping we break below the neckline and fall for a measured move down. I still think a trading range is more likely for the rest of the day. It's also a little bit early for trend resumption down. So I think we probably have to get one more bounce before the bears will get trend resumption down. Bulls still have a higher low major trend reversal. Most 60% of higher low major trend reversals, 60% of all major trend reversals do not result in new opposite trends. They result in small losses or small wins. But the 40% that do lead to reversals more than make up for the 60% of small wins and losses. This is a tiny expanding triangle, up on 52, up on 54, trying to go up on 56. Also a higher low major trend reversal and a test of the 38 high. If 56 closes around its high, it's a reasonable buy for a test back up to the 49 high and possibly a swing up from a higher low major trend reversal. No surprise, not a great signal bar. We've been sideways now for 25 bars, therefore trading range, right? And you have to assume everything is going to be a little bit disappointing for bulls and bears. Nothing's going to look quite right. But we're in the buy zone. We have a higher low, and we've had several attempts to resume down, and we're not going down. And that usually means the market will try the other direction, which is up. The bears are hoping this is just a pullback. We have a double top bear flag or a double top bear flag this way, a bear breakout and a pullback. The bulls are hoping it's a higher low major trend reversal, breaking above this double top and rallying up to the top of the wedge. Most likely more sideways. For the bears, the top of the developing trading range, but I still think we've been always in long since around 41 or 42, and I suspect we'll stay always in long for the rest of the day. But whenever you have a trend early in the day and then goes sideways, if you're going to get a breakout at the end of the day, 50-50 chance you're going to get trend resumption down, 50-50 chance you're going to get trend reversal up. The bulls are trying for their major trend reversal up, but if they do not get a strong rally here, then the bears will try to get a trend resumption down. Will traders buy or sell 44 high? Well, both, right? I certainly would not buy on a stop at 49. It's probably okay to sell with a limit order there and then a stop a couple ticks above 16. I think the bulls, obviously are trying to get up there. To me, it's a sell zone, but I'm willing to buy if we get a strong enough breakout. I bought here and I'm out. I'm back to flat, and I have not sold. This is strong enough up, so I probably will wait for the market to go sideways for a couple of bars before looking to sell again. Getting near the end of the day, so the daily chart becomes important. If it closes on its low, it's much more bearish. If it closes above the trend line with a big tail, it's much less bearish, much more neutral. Bull breakout. The bears want a failed breakout above a double top. That is a type of wedge. 3 pushes up, 1, 2 for the double top, and then 3. In general, whenever you get a breakout that fails, or anytime you get a breakout, 50-50 chance the breakout will fail, 50-50 chance it'll succeed. And this breakout is strong enough so that probably there'll be at least a little bit more up. It's possible second leg trap in a trading range, 1 pullback, 2, but more likely we'll get at least a small second leg up. I am not enthusiastic about buying high. I want to buy low, and I think we're always in long, so I prefer to buy low, and I'm less eager to sell high, although I think, well, obviously the bears who sold the 49 high, sold more 1 point higher, have already made money. We're not forming a series of gaps in the rally, so it's still a two-sided market. As far as selling below 59, I'm not going to do it. That is a break above the 60-minute high. We have a pullback to the bull trend line, and we have a bull reversal bar, but 3 big bear bars. The reversal up, therefore, is probably minor on the 60-minute chart, and that means that we probably are not going to go very high up on the 5-minute chart. Probably buyers below for the bears, failed breakout, double top, but strong enough, 57, 58. The bears probably need a micro double top. For the bulls, a high one buy 60, but tough buy. You're buying a breakout above, a pullback from a breakout above a trading range, but you're buying pretty high up. I'd rather buy 59 low or lower than above 60. This is the end of the hour, the 5th hour. It's the entry bar for the buy above last hour's high. And last hour's high, good bar, but bad context, 3 big bear bars. And this hour, a bad entry bar. And you'd expect that after 3 big bear bars. You'd expect the market to go more sideways. Bulls hoping for a measured move up to the 16 high. I think this is a surprise bar. I scalped and I'm out. And this is surprisingly big. I did not sell above 59. What about bears selling 59 high? I did not do it. When I get out of a long, I usually do not switch to selling right away. Also, 61 is a surprisingly big bar, and it makes me think the odds of the market getting to the 16 high are greater. limit order bears need it to fall one tick below 59. And if it does not, then we might get a measuring gap, which would take us back all the way up to the low of last week. Right now, I think that is unlikely to get up there. Remember, daily chart testing a bull trend line, so we're bouncing at the bull trend line. Bears need one more tick, and that's useful information, right? If it does not drop one tick below 59, that increases the chances we're going higher. Look at the screen over the past 40 or 50 bars. What do you think? The odds are we're going to drop below the 59 high, and the limit order bears are sold there and 1 point higher will make money. A lot of trading range trading, up and down and up and down and up. Remember, there are bears buying at the 59 high. Okay, the bears are buying right here. They're buying back their shorts, so at least the bear scalpers are. Other bears might sell below 62. We have a failed breakout above a double top, and this would be a second entry short. Also a wedge 54, 59. I would get out of longs below 62 if it's a bear bar. Aggressive bears can short, second entry, failed breakout above a double top, and then a parabolic wedge here. But probably not going to go down sharply. Bad follow through after 58, bad follow through after 61. A lot of the bulls will wait for a couple small legs down before buying again. So what do? Let's say we have a 2-bar reversal, 62. Well, I think you get out of longs below a bear bar closing near its low. As far as shorting with a stop goes, you're risking a lot. Your stop would be up here. You sell on a stop below here. I'm not sure that it's worth selling on a stop. Fairly tight channel, more likely minor reversal and sideways than major reversal down. Remember I said we might get trend resumption down at the end of the day. Well, this is the end of the day after 11:30 or so, and it's possible that we just sell off for the remainder of the day. So it's an okay swing short. If you want higher probability, you wait to see if we get maybe 3 consecutive bear bars and then start selling closes. I am flat and I am not selling below 62. I'll wait to see if we start to reverse down strongly and then sell. Too low down to be selling, especially when the channel up here is so tight. So probably sideways somewhere in here. For the bulls, double bottom 60, but big enough reversal bar 62, probably small second leg sideways to down. So probably better to wait for a micro double bottom, maybe a triangle, 3 pushes down, 1, 2, and then 3 over here somewhere. And for the bears, the risk is too great I think, to be selling below 62. Probably the bulls will need a second entry, and therefore sellers above. I think we're always in long, so I'd rather, instead of selling 63 high, I'd rather wait to see if we go sideways for a couple more bars and get a triangle. So 3 pushes down, 1, 2, and then maybe 3. For the bears, a lower high, but minor reversal. More likely the bulls will try to get a wedge bull flag. We could still get trend resumption down into the close. I don't think we're going to get a strong bear trend because this bear trend was not especially strong. The bear bars were not particularly big. We had a lot of bull bars all through here. So if it does go down, it's probably not going to lead to a major second leg down, like leg 1 here, pull back leg 2. On a higher time frame chart, this is a low 2 bear flag, 15-minute chart, a 20 gap bar sell at the moving average, but a doji signal bar and 6 bull bodies, not a strong sell. Bulls want a triangle or wedge here. 3 pushes down 60, 62, 66, and then they're hoping for a trend resumption up. The rally is reasonably good, but not strong enough to make me think we're going a lot higher. And the sell-off, I still think we're always in long, and I think the best the bears will get is maybe a test of the 56 low. That's the wedge bull flag, but bear signal bar 66, so more likely more sideways. Bears trying to get outside down and a measured move down to the 56 low. Not a good stop entry sell. You can see bears sold the 65 high and the 63 high. What happens if we get a big bear bar closing on its low? Well, that would be a surprise bar, and it probably would lead to at least a small second leg down. Right now the market's deciding. I think it's not likely to get up to the 18 high. So I think the decision is whether we're going to get trend resumption down. I think that's not likely, or stay sideways. I think that is likely. Past 40 bars, this is the market. Trading range. Final hour. So we always have to be prepared for a trend up or down. But given that we've been sideways for 40 bars, I think most likely we'll stay sideways in a limit order market. Breakout test, buy signal bar, high 56. This is similar to this. A sell-off not all that strong usually leads to a reversal, but the bulls are running out of time. Are we back to always in short? I don't know. I'd like to see more bear bars closing on their lows, 66, 67. Not especially bearish. The bulls hoping for a wedge, 63, 66, but 3 or 4 bear bars, not a very strong buy. The bears would like to break below 56 and get a sell-off into the close. Probably buyers around the 56 low. Kind of like yesterday, double bottom, slightly lower low. daily and weekly chart are important. Remember earlier I said if the day closes on its low, it'll be more bearish on the daily chart and it would increase the chances that we're going lower. And then weekly chart, the bar closes tomorrow. If it closes on its low, it would increase the chances that we're going lower. I think we're going lower regardless, but the odds go up if today closes on its low and if tomorrow closes on its low. Bulls trying to get a wedge, and we're getting a bear breakout that would take us to a new low of the day. Probably more bull profit takers than, bear profit takers than bull buyers here. This is too early for a sell to close finish, so we probably will not make it to the end of the day. Does this qualify as a lower low major trend reversal? I think too many bear bars, so the bulls would rather have a small level bottom here. So yes, it's a lower low major trend reversal, but I would not buy above 70 unless it became a very dramatic bull reversal bar, very big bull reversal bar. Limit order bulls probably buying the 38 low, probably buying the 56 low as well. Looking for scalps. You can call it an expanding triangle, 32, 38. Shape not good. It's also a lower low major trend reversal. Too many bars to make it to the end of the day, sell to close. But right now, 6 bars down, probably too early to buy unless you're buying with limit orders, 38 low, and risking 6 or 7 or 10 points and scaling in lower. Although on the 5-minute chart, this does not look particularly significant. It's very significant because of the daily chart and the weekly chart. Yesterday we had a bull reversal day, and today we opened near yesterday's low, and today we have a big bear trend day. That is a bearish pattern, and it often leads to a swing. It's a pretty strong reversal. We have a bull bar followed by a bear bar, where the top of the bear bar is near the bottom of the bull bar. Sell to close, but I think it's getting pretty dangerous here. This is 6 consecutive bear bars, big tail on 70, and probably too early to make it to the end of the day. So we're probably going to get a several bar rally at some point between now and the close. I hope not, because I'm short a whole bunch of stuff, but that's the reality. I drew this channel. Market's probably now using this one. $60-minute chart at the bottom of the channel at the bull trend line. I would buy back shorts either right now at the market or on the first reversal up. This is too many bars occurring too early. Usually for a sell to close bear trend to make it to the end of the day, it has to start around 12:30. And this one started over here at 11:55. Usually that will not last. Usually we'll get buyers. micro double bottom. My usual rule in a sell to close finish at the end of the day like this is to exit 4 ticks above a bear bar or 1 tick above a bull bar. I would not be holding on to the shorts very long. I think it's okay just to get out at the market. We already have, is this 8 bars or 7 bars in a sell to close finish? I'm really always fascinated by VXX, by just how much volume. 2 million contracts, 2.5 million contracts, 4 million contracts, or shares. It's just incredible how heavily traded the thing is. If you think about it, 4 million contracts, here's a 1 minute chart. It's 400,000 shares in that one bar, right? 400,000 shares. So that you can sell huge quantities or buy huge quantities at the market and not make it budge a tick. We might have to get to this trend line before we get the reversal. I don't know, but I think it's okay to get out of shorts either at the market or on even the first small reversal. Sell the close end of the day. This one started early, started around noon, and it did make it to the end of the day. This one started around 12, after 12, 12:30 or so. Not much of a bounce, but a little bit of a bounce. When is this? April 26th. That's April 26th a year ago. I want to check the start time there. That was actually this year. The high was 1215. I would get out of shorts. We have a triple bottom, micro triple bottom, lower low, and we have a bull bar. Even though it's only a 1 tick bull bar, I would get out of shorts. Usually, sell the close finish that starts this early does not make it all the way to the end of the day. When do you sell again? I probably would not sell again unless we get some dramatic collapse, start to get a series of big bear bars closing on the lows, I might take one more short. Let's say we get a bull II with a decent bull bar. I think it would be an okay buy if you get a pretty good bull bar. The risk that you have is that we just stay sideways in a tight range instead of reverse up. We have that gap below starting to come into view on the daily chart right here. Whenever you have a magnet at the end of the day and you have a trend day, the market so often just relentlessly goes to the magnet. So it looks like we're probably going lower despite too many bars in the sell to close finish. We're so close to that magnet that we might not be able to escape its pull. If bears are still short, I think they got to get out one tick above a decent bull bar. And aggressive bulls, if 75 is a pretty good sized bull bar closing on its high, aggressive bulls can buy, trying to get 2 or 3 or 4 points up. I am flat. I don't want to be selling this late in a sell to close bear trend, especially after it went above a bull bar 72, even though we have an obvious magnet down below. So I'm just trapped out. I've been looking at my VXX, and it's really not increasing all that much, but it's still good. Still a 13%, 12% move on the day. So what do? Let's say 77 is a great looking bull bar. You got 3 little pushes down, 1, 2, 3. We're at support, the bottom of the channel. We're probably close to a measure move down from this. But we got that gap, which is a magnet just below. I would do nothing. I would get out of shorts and not buy. Buyers or sellers below 70, I would do nothing here. I think it's just very difficult to make the risk reward and probability work out. Probably buyers below 71, but you're going to run out of time. And would I sell the 71 high? I would not. Would I buy the 71 high? The channel is so tight that it's really difficult to bet that we're going to bounce. Probably the best the bulls get is sideways this late in the day. Really interesting day. We still have 3 bars left. Right now, I'm really interested in the higher time frame charts. Daily chart, yesterday we had a bull reversal bar at the moving average. Today we opened near yesterday's low and had a big bear bar. That is a good reversal. And usually you get follow through selling, assuming we close on the low. Obviously, if we race up in the final minutes, that will not be the case. But if we close around where we are now, it's bearish, and it increases the chances that we'll go lower. Maybe a minimum target, maybe a measured move down based upon the height of the trading range. That would close the gap. We're almost there. Then the prior higher lows. We were sideways here for over a month, and we're back into that range. We may go sideways here for a while, but I think the daily chart's probably always in short. Obviously it would be higher probability if tomorrow was also a bear bar. And so many great bear bars have had terrible follow through during this whole rally. Bear bar, bad follow through all the way up, right? So tomorrow it becomes important. When you're in a bull trend, you'd expect the bear reversals to have bad follow through. However, if you're in a bear trend, we do not know that yet. If you're in a bear trend, you expect bear bars to have good follow through. That makes tomorrow important. If tomorrow has even a small bear body, I think that would make it increasingly likely that we've begun a correction, that we've changed into a bear trend. Big bear bar, tiny bull body, enough to reverse it. Big bear bar, bull bar. Here we have a bear bar but a big tail. Big bear bar, big tail. All right. If tomorrow we get even a small one-tick bear body, that would be enough to increase the chances that we've begun the correction. Weekly chart, big outside down week. Tomorrow's Friday. And if it's a bear trend, you'd expect bear bars closing on their lows. So you would expect that we'll start getting weekly bars closing on their lows. And, tomorrow would be an opportunity for the bears to do that. So if tomorrow closes near the low of the week, that would increase the chances that we've begun to move down to the moving average. We're almost to the moving average right now, right? Okay, looks like around 24.20, another 20 points down. I expect it to fall at least this far below, so 20 or 50 points below. And that would take us down to here, which is where I think we're headed. So that's around 2350, maybe 2300 over the next month or two. Monthly chart. It's in such a tight bull channel, it's unlikely to fall very far. Maybe we'll pull back for 2 or 3 months, maybe down to here, the March and April lows, that area. Minor reversal on the monthly chart. But, if you fall 150 points on the daily chart, it's a major reversal. We had a big sell-off reversal from an all-time high a couple of days ago. And yesterday the bulls reversed it back up. And then today we opened around yesterday's low. First bar of the day, a bull reversal bar for a double bottom, yesterday's low, but tail on top. Second bar of the day, possible high of the day, but we're right at yesterday's low and near the bottom of the month-long trading range. Not a high probability sell. And then bar 3, always in short. Bar 4, probably sellers above. And at this point, we don't know if we're going to get a bull trend day, trading range day, or a bear day. But right now, it's more likely that we'll either have a bear day or a trading range day. Not a good sell signal, bar 5 or 6. Then we get a surprise bar 7. So sell the close going a little bit lower. Now we got 3 lows, 1, 4, and 8. So it's a possible parabolic wedge opening reversal, but a bear bar on 8 and a big surprise bar on 7, probably sellers above. We might get up to the sell climax high, 5, 6, moving average, but right now I think we're always in short. A low 1 short below 11, but another decent bull bar 1, 5, and 10. I think probably 2 legs up because of the parabolic wedge, but we're still always in short. Now we're getting a series of bull bars. Maybe we're always in long. I think the bulls really need a big bull trend bar, which they do not yet have. And then we get this bear bar here. You can call it a low 2 or a wedge. It's actually probably a wedge on a smaller time frame. Up, and then down, and then up, and closing on its low. Certainly an okay swing sell, but we might get a double bottom around the 12 low and try to get a major trend reversal. Then we got a series of bear bars, so probably back to always in short. 19, a higher low, double bottom 12, but 4 bear bars, sellers above, sellers on the close. 21, a pullback from this bear breakout of this wedge bear flag. You're at the bottom of a trading range, so it's okay swing, probably not good enough for a scalp. Then a surprise bar 23, breaking below 12, probably going at least a little bit lower. But, the bulls are going to try to get a double bottom here. So, do you sell the close? Do you sell the 8 low? I don't know. I'd rather be selling higher just in case we end up going sideways here. Bull reversal 24. You can argue it's a lower low major trend reversal, possible low of the day, but let's see if the bulls can break above the moving average. Not good entry bar, not good follow through 26, and then bear bar here, second bear bar, third bear bar. So it looks like we're probably going at least a little bit lower. Micro double bottom for the bulls, you can call it a wedge, 19.24, a lower low, but the channel is really, really tight. And buying with the stop above 32, while reasonable, I think it's not a very good buy. I would wait for a second entry buy or for a strong bull breakout. For the bears, they have a double top 5 and 15 neckline, and they have a small double top here. Not a strong sell. We're getting pretty good bull bars. Channel down continuing. 4 more decent bear bars, but we're breaking below the bottom of a tight bear channel and trying to get a reversal here. I would get out of shorts above 38. I think buying above 32 was okay, and therefore scale in bulls will buy more above 38 or 39, trying to get back to the 32 low. Okay, 4 bull bars, probably always in long, probably 2 legs up. 44. Now we got 5 or 6 bull bars, probably buyers below, but buy climax 43, so probably sideways here for a few bars. The bulls, a double bottom 46, breakout test 38, big enough bear bar 51, so probably a little bit more down, but probably we'll try to get a higher low and a second leg up. Okay, now an expanding triangle 52, 54, 56. A doji bar, not great, but probably going higher. I think it's an okay buy for a second leg up. It's a higher low major trend reversal. 40% of the time you'll get the reversal and you'll get up to the top of the wedge, maybe higher, but 60% of the time you do not. So 60% chance this is not going to be the start of a big swing up. 62, we got a wedge, it's a nested wedge, 54, 59, and then we have a failed breakout above a double top, so that's a wedge as well. Not a great sell signal bar. It's forcing you to sell fairly low down. But for the bulls, buying above 63, you got a double bottom 60. This is a big enough, big up, big down. I would wait for a second entry buy. And the bulls got their second entry buy 66, but a bear body, so I would wait some more. And then surprise on 69. So it looks like we're going at least a little bit lower, follow through, so it looks like it's probably sell to close. 72, we got a micro triple bottom, a lower low, major trend reversal, but very tight bear channel, so a minor reversal. I think okay for the bears to get out above a bull bar, 72. We have magnets below, we have the trend line and the gap on the daily chart, but I personally, I would just get flat and wait for tomorrow. And steer stepping down, and we have a wedge here, and we have a little bounce into the close. For stop entries, below 2, possible high of the day, not high probability. Above 4, I would not. Below 5 or 6, really not a good stop entry trade. Above 8, not great for the wedge. Above 10, better. Above 12, okay. Below 16 for a wedge, probably going in for a trading range, that's okay. Above 19 should be sellers above. Below 21, okay, probably a trading range, but an okay short. Above 24, the channel is too tight. Same with above 32, and you're going to make the same case above 38 as well. The only difference above 38 is it's a reversal up from a break below this tight bear channel. And then up through here, not great stop entries. Probably buyers above 54 or 56, and below 62, I would not. I think it's difficult to take the short here. Below 65, you can take it for a swing, arguing 2 legs up, 1 pull back 2, but probably more sideways. However, we're late enough in the day so that we might start trend resumption down. If the daily and weekly charts are reversing, you'll often get sell-offs in the final hour. So this could be the start of it. And then through here, I would not buy above 72. I would not sell below 73. and I would not buy above 71 and not sell below 80. Buy the close, sell the close. I thought we were short on 3, so sell the close 3, 4, maybe 5, but you still need to stop above 1 or 2. And then through here, is it buy the close up here? We're probably always in long, but pretty close to the moving average. 3 or 4 bear bars, probably sell the close, but we're probably in a trading range. Same here, 3 or 4 bear bars, probably sell the close, but in a trading range, so not great. Same here, same here. Here, 41, 42, I thought we were always in long. I thought we would get a couple legs up from this wedge, and the channel is weak, so probably we'll convert into a trading range. I'm not confident that we'll get here, but we'll probably get here. The bulls, theoretically, a reasonable buy 24, definitely a reasonable buy 32, so we should get at least to here on a bounce. And then sell the close 69, 70. It's tough. You know, we've been in a trading range for 40 bars and you're selling on the low. We have magnets below, but I'm not sure we're going a lot lower. Limit orders, sellers above 4. Possibly, I thought there'd be buyers below 11 because of the wedge. And then through here, sellers above 19. Probably sellers above 24, and probably sellers above 32 because of the tight channel. And here, probably buyers below 44, maybe sellers above 44. We did not, I don't think we got there. And then here, it looks like we're trying to form a higher low, probably buyers below bars. Up here, buyers below 61, and you can see bears made money selling 49 high and selling 61 high. We should get a second leg down after 62, so sellers above 63. 66, theoretically it's a buy, but not a good buy signal bar, and high up in a developing range, so I would not take the buy, and I did not take the sell. 72, I would get out of sell the close shorts, and I would wait for tomorrow. Anyway, this is a really good, it's a really good day for me, but it's a really good day because I think it's the kind of day that the market has needed. I've been talking about this, since who knows where, on the weekly chart. I've been talking about it since in here, that it's too many bars above the moving average. And, today, this is the weekly chart, but on the daily chart, today is the kind of day that the bears need. Tomorrow is really, really important, right? The bears need at least a bear body. Even if it's only one tick, they need a bear body. If they get it, that will I think make it 60% chance we're going to get at least a second leg down to this area. I think 60% chance we're going down here. Can you analyze the Chinese yuan, the dollar versus the yuan? I don't have the data, so TradeStation does not have that data, so I cannot look at it. Do you have any advice on how to study the video course? I really don't have any particular advice. My idea was to make it comprehensive, and as I'm sure you see, a video might have 10 charts, the same chart on 10 different slides, and I talk about different things, and then I'll talk about the same concepts, 10 other times in other videos, but with different charts. And my thought was, my thought is to give as many, rather than putting one PowerPoint and talk about like a major trend reversal and put 20 different examples of major trend reversals, I'd rather totally analyze one chart over 20 slides, and then major trend reversals will come up at other times, and they'll have other charts. I don't know, if I were doing it, I would try to go through it, from beginning to end over the course of a year or two, and then anytime something particular happens during the day, and it's interesting, I would try to find the video that corresponds to it and take a look at that video. That's how I would do it. a lot of people, the big problem is time. You know, at some point I might end up making a summary version of the course, maybe 10 hours or something. But my goal is to create a comprehensive course that no one else on the planet would bother doing, and just having it out there as a resource for for anybody who wants it. You know, and but I understand it's a lot of hours and it's really difficult to go through all that. And but I do think, you know, I tried to put good stuff in every video. So and if you're going to be a trader, I think it's useful to know as much as you possibly can. And but I would try to organize it in my head in terms of going through it. Like, okay, I want to start studying wedges, or I want to start studying major trend reversals or minor reversals, or I want to get more information about stops or a little bit more about the math. And you just pick a topic and then go through the series of videos on that particular topic. But at the same time, I would be still trying to go through all the videos from starting at the beginning and going all through the end. And then as a second way of doing it, at the same time, I would selectively jump ahead or jump back to specific topics depending on what took place during the day. Question about crude oil. Today's 5-minute chart on crude oil had a few 1 and 2 tick traps on the high 1 and high 2 setups, like bar 13 and 11, 13, and 26. Do you use information like this to determine if it could lead to a strong trend? Yeah, I'm always interested in who's getting trapped. I don't know if my bar counting corresponds to yours. So if you mention other markets like crude oil, it's probably better to mention specific times. But anytime a bull scalper tries to make money and it hits his limit order or misses his limit order by a tick and then goes against him, I think that's really useful information. That's telling you that it's probably better not to buy and to only sell. And if you're able to, you look at where, let's say you're flat, let's say you didn't take the high 1. So let's say you didn't take a trade. And you see that it's a bear trend, and you see that the bulls are trapped. It needed to go another tick or two before they can make a profit. And then ask yourself, where would these trapped bulls exit? And that's where I would look to short. I would try to get short where they are exiting, because if the bulls are giving up and selling, they're not going to be buying again for at least another bar or 2 or 3, which means that if I sell, I have a pretty good chance of making money. So yes, I'm always talking about whether or not counter trend scalpers can make money and how easily they can make money. And it's the same thing with traps. If one side is consistently getting trapped, then it's better not to trade in that direction. The other day I talked about this on that rally to the all-time high up here. I said, gosh, the bears are not making a penny, and therefore it's too early to sell. So, I said, you either buy or you wait. And so I pay attention to that. And then the way down, it was really hard for the bulls to make money. And in that kind of a situation, I'm either going to be short or flat. So I always want to know if one direction is having a very difficult time making money. And if they are, that tells me the market probably has more to go in the other direction. All right, so tomorrow is, I think, a really fascinating day. At a minimum, the bears want a 1-tick bear body. On the other hand, if they get a big bear bar closing on its low, then that would mean probably 60 or 70% chance that we'd fall for a measured move based upon the height of the breakout. As you know, I think this is where we're headed, right? One of these lows, the May low, the March low, 2300, 2350. But tomorrow could significantly increase the chances that the correction has begun. When you have these reversals, the probability really does not go very far up until after you're already halfway to the target. So let's say tomorrow has a decent sized bear bar right down here. And at that point, you look at that and you say, yep, the bears have taken control. We're probably going for a measured move down, right? But like I said, you'd already be halfway to your target. And that happens all the time. Whenever you wait for the probability to go up, and that's okay to do, the trade is probably already half over. And that's why I started increasing my shorts all through here over the past several weeks. I thought the upside was limited, and I thought the downside was pretty good. All right. Hope everybody has a good night.